The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9 a.m. Eastern Time, Friday morning. We got about 25 minutes to go until the start of trading. We got a little bit of volatility, throwing a little fuel on the fire this morning. We'll bring it up in a moment with the Fed not extending the bank's leverage as of March 31st. We got S&Ps right now. All the markets back in the positive. S&Ps positive by 5. Tech stocks, NASDAQ 100 positive by 46 right now. Dow back positive by just 3 points, and the Russell positive by 5. Let's jump over to the story that hit the tape right at 9 a.m. as I was doing that update, literally right at 9 a.m. Eastern time within the last about 7 minutes. So the Fed, they're not going to extend a pandemic crisis rule that allowed banks to relax capital levels. Anything to do with capital requirements, with less ability to lend, with rising yields, the market not a fan of that, obviously. So the Federal Reserve on Friday declined to extend a pandemic-era rule that relaxed the amount of capital banks had to maintain against treasuries and other holdings in a move that could upset Wall Street and the bond market. We'll jump over to the bond market in a moment. We're seeing some volatility, as I mentioned. In a brief announcement, the Fed said it would allow a change to the supplementary leverage ratio to expire March 31st. The initial move, announced April 1st of 2020, allowed banks to exclude treasuries and deposits with Fed banks from the calculation of the leverage ratio. That's going to allow them greater leverage. Allowing this rule to expire, essentially, is going to decrease the amount of leverage that they can have. They're now going to have to have capital when holding these on their balance sheets. The decision to relax the capital requirements has been widely viewed as a key to calming what had been a tumultuous treasury markets in the early days of the pandemic. A need for cash had caused a massive sell-off in the bond market that the Fed helped to cover through its liquidity programs. The central bank said it will solicit public comment on how to adjust the SLR. What is that going to stand for? Leverage ratio, something. It's probably up there somewhere in the future, but it decided to let the exemption expire for now as planned originally. So the board will take appropriate actions to assure that any changes to, come on, where's that SLR? Shame on them for not telling me what they're even talking about, and it's in here somewhere. Do not erode the overall strength of the bank capital requirements. So they probably think this isn't going to hurt the markets too much. We'll find out, though, folks. A little bit of a freak out in terms of the S&Ps actually making it below the lows of yesterday on that flash low we got right there. Pull up the tech stocks, almost down to that level. You saw the NASDAQ 100 just trade off almost 150 points. You're talking about we were just trading at 12,860. You made it down to a low of, I guess, 12,740. The lows overnight, 12,713. The Dow in negative territory. Dow making it below the lows we had briefly as well, 32,752. And the Russell right down at those levels, 2265. We were up at about 2340 middle of the day yesterday. Talk about an acceleration, folks. You're talking about 80 points in the Russell 2000. All right, commodities. How about crude yesterday? We'll get into this a little bit more. Crude, putting this thing on a daily. It's been no stronger market than the crude market. We consolidate all the way from June 1st to about the middle of November. You break out of that consolidation. The higher boundary line of that consolidation was $43. I mean, remarkable when you look back. Crude, November 2nd, $33.64. You trade up to a double bagger, up to almost $68. Quite a sell-off. I mean, we really hadn't had a single dramatic sell-off. I mean, Look at when you zoom this in. You're talking about from November 2nd. Yeah, we had some red bars in here. We had a couple here and there. All right, we did have a pullback February, late February. That was, I think, the biggest pullback you could find on this chart, right? Going from about 63.57 down to 59.38. We all got it all back in no time. And just like that, though, you wipe out basically the gains that we had over the last 5 weeks in crude. You're back to a price level of $60. Again, all things considered, crude relatively healthy, sitting at $60, considering the pandemic still raging, the economy is still struggling. We still got 10 million people underemployed, even in the U.S., according to non-farm payrolls. But the cascade just began yesterday, and it did not stop in a big way. So, as Bloomberg puts it up here, whoop, that's not the one. There we go. Oil's swift rout triggers the biggest weekly loss since October. As I just mentioned, it's been a run since straight November. Look at the acceleration we've had on a weekly basis. I mean, those are huge percentages. This is the New York futures poised for the biggest weekly slump since October. You were posting, 4% a week. That looks like a 6 to 7% a week, 5%, 7%. We break even almost. We're back to a 5% gain, a 7% gain, an 8% gain, 5% gain, 4% gain, 7% gain. Can't continue like that forever, folks. And we've pulled back pretty dramatically. You might be down about 10% on oil. There's a lot of analysts out here saying what happened, right? There wasn't really a huge indication. There was selling, folks. There was a lot of selling in a big way. 7.1% decline. The drop followed a surge in treasury yields that pushed the dollar higher. While there were signs of a softer near-term crude demand in Asia, the unwinding of long positions by some commodity trading advisors, the unwinding of long positions, that's called the selling, folks. The selling of commodity trading advisors may have also played a role. Yeah, I imagine that selling in a market like oil yesterday that went from $65 to under 60 in a matter of a heartbeat might have played into how things were playing out. You got a JP Morgan Chase and Company analyst, Natasha Kaneva, writing, "Don't mistake a correction for a derailment." I would agree with that assessment. As I just mentioned, oil sitting at $60, pretty healthy, all things considered. The price move was likely accentuated by a washout of investor length, which has been steadily rising since late last year. Despite the abrupt setback, prices are still up more than 20% this year on prospects for a recovery from the coronavirus pandemic. That climb has been helped by a surprise decision by OPEC and its allies to extend supply curves. If you were in this market, right, you got to be aware that this thing is going to face some pullbacks in some degree. One of the things I always take a look at just to see what kind of moves are possible. What's on the realm here? What's a possible move if you're going to be a bull in oil? If you're going to be in here over the last few months, you're going to be in a commodity that goes from $34 up to $68. Okay, you're looking at a 38.2%, 382 retracement of about $55. Well, we got there in almost one day. We're at $59.99 right now. That could still be a short-term pullback within a bullish move. You're looking at $55. We get below that level, the 50% retracement will bring it just down to about $50. I don't see it happening right now. But, man, yesterday's action, you want to keep those spikes up on your shoulder if you're in that oil market, because that thing just fell out of the sky, and it did not stop. 58.28, we bounced to 61, but you see the acceleration, folks. All right, now let's look at the Fibonacci retracement we got overnight. Okay, you bounced for a 382 retracement, almost made it back up to a 50% of the entire move down. We're going to be coming right back down to these critical levels here of about 58.28, which was the lows we had last night in that crude market. All right, folks, we got some volatility. We got 16 minutes to go until the opening bell. S&P's positive by 1 point right now. Tech stocks hanging on to gains up by 6 points. The Dow negative now by 7, and the Russell positive by 1. We got a lot to talk about. We got FedEx earnings. We got Nike earnings last night. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got the markets pretty much in positive territory. You get the S&Ps trading at 39.10, up by 4 points right now. We got about 11 minutes to go until the opening bell. Jumping into some of the stocks with earnings last night. So we got two big ones as we wrap up this season of earnings season. We'll start it off with FedEx. FedEx trading higher. We closed yesterday at about 263.51. You were trading at almost 268 before the market sell-off towards the end of the day. FedEx comes out with their numbers. They accelerate to 275 this morning. We're up to 278.31. You're talking about $15 in the positive for FedEx. Jumping into their numbers, strong numbers. FedEx on Thursday reported better than expected profits and revenue in its most recent quarter after the CFO called an unprecedented peak holiday shipping season. That was to be expected in a big way. Getting into the numbers, they took in $21.51 billion. Not bad. They take in $1.5 billion over 90 days than what the market was looking for. Revenue rose 23% from just $17.5 billion, we'll call it, the same quarter a year earlier. Think about that. They added $4 billion extra revenue in the same quarter from a year prior. I mean, it makes sense, folks. We weren't out shopping in the way that we normally were. In malls, right? What were we doing? We were ordering a lot of presents online. Holiday season, online, in a big way. You had net income, $939 million, almost $1 billion for net income compared to $371 million a year ago. 347 was what they took in. They were looking for 323. However, severe weather in February that hit several of the company's operating hubs, including its primary FedEx Express hub in Memphis, cut its operating income by roughly $350 million, the company said. Quite a cut. The Memphis-based logistics giant, key component in the U.S., in a big way. FedEx trading higher this morning. We'll see how they do on the open. 278, putting this thing on a daily. The highs, 305.66 at about 2 278 to 279 we're trading at right now. You're kind of in the middle of this consolidation we have. You back things up to the last earnings event we had. You were sitting at a price point of 292. We closed out that day prior to earnings. The next day, we opened at a price level of about 283. So we're going to open right in this bar of 278, which correlates to the last earnings. It's going to be the highest price level FedEx has seen since their last earnings event. All right, the other juggernaut out there was Nike. Not quite the same scenario for Nike. They're trading a little bit lower today. They had quite an acceleration last night. You spike instantly to 135, got it all back. Some of the volatility when they come out with the numbers on any equity. Quick moves in both directions. Nike misses the mark a bit, though. You're trading at 140, down from 143. Getting into Nike numbers. So Nike posts mixed results. Sales fall short of estimates, hurt by U.S. port congestion. So that's something they talked about a lot in explain, and you never want to be explaining away misses, folks, but congested ports in the U.S. and ongoing store closures in Europe weighed on Nike sales during its fiscal third quarter, the company said last night. In North America, revenue dropped 10% year over year as Nike said shipments have been delayed by more than 3 weeks. I mean, this early on in COVID, this is a big story, right? In terms of just keeping people in stores, keeping the process of your business moving forward. Nike continued to see momentum online. Its e-commerce sales surged 59% during the period. Nike continues to dominate on their online sales. Earnings, they beat 90 cents versus 76, but revenue, as we mentioned, a miss of 10.36 billion. Market was looking for over 11 billion. Net income, that 90 cents correlates to 1.45 billion compared to only 847 million a year earlier, better than the 76 cents the market was looking for. Total sales 10.36 billion versus 10.1. In North America, revenue dropped 10% year over year, hurt by shipment delays. So 3 weeks is what they were looking for in terms of the delays that they're seeing that hurt the sales. That also meant sales at its wholesale partners were affected as business such as department stores, sporting good outlets didn't receive goods on time. It's got to be a tough one when you're dealing with the logistics of international ports bringing items in. It's holiday season. You can't get them to the retailers that need to. That hurts your numbers. Backlogged West Coast ports, a global container shortage. Think about that. There's not even containers to be shipping everything. And a truck driver shortage in the U.S. continue to be a headaches for businesses from Nordstrom to Urban Outfitters to Peloton. Many have said they expect these issues to drag on until the second half of the year. So that's what hit Nike this morning. We'll see how it reacts on the opening bell in about 7 minutes. Always interesting to see how some of these companies in particular react on the earnings, and then really when supply decides to meet demand, as in when the volume starts at 9:30 in the morning, market participants really become a factor. That's when we find out what the market really thinks. One example, Five Below. I mean, look at the acceleration yesterday, right? Five Below, they had some great earnings, folks. They spike on Wednesday night. Now, I'm backing things up a little bit to 214. You hang there for most of the overnight session. You come into the opening bell at 205. Maybe you come into the opening bell at 204.50. And just like that, a rocket ship. This thing trades from 205 down to 190. You end the day at 183. And they delivered strong. Folks, in many of these equities, you better be delivering strong numbers when you're basically sitting at all-time highs, up more than 4 times the price of your equity from a year ago. FedEx, putting it on the daily, we've been consolidating. We're going to open at about 278. That's going to bring us back to basically where we were middle of October of this year for FedEx on their open, and Nike taking a look at where we are on the daily. Nike shares opening at about 140, pretty similar action. That's going to bring us back to about December highs that we had in Nike. The high print on Nike right now, 147.95 for Nike shares. Checking back into the market, really interesting to see how this market opens with the Fed coming out in terms of not extending the bank leverage rule. We saw that first acceleration down to 38.96. The market showing a little bit of weakness right now as we approach that opening bell. We got less than 5 minutes to go, and you're hanging at some dicey areas in terms of right near the lower level that we were at yesterday towards the end of the day. This is also correlating to the lows we had last Friday. Let's just back it up on a 10-day, 30-minute, and you see that backs it up to the low. You get below this level, and geez, it was quite a cascade from the prior week. You trade up from March 5th all the way through that week, ending the week last week at about 39.26, we'll call it, somewhere around there. We've chopped around. We're now approaching right where we were a week ago in the S&P, sitting just above 3,900. And you break those levels, and we'll see where we go. But there might be an acceleration, folks. There's not a lot stopping this, as we had quite a quick incline from lower to higher price during that week. I mean, remember, from 37.28 2 weeks ago on Friday, you traded up almost 200 points during that week to end the week at 39.20, or give or take. And we're going to approach those levels as we open. S&P's minus by 2. We got the NASDAQ right now, again, right near the lows of last Friday as well, 12,785. And we'll jump to notes and bonds to see how they're reacting. Quite a little pullback on that Fed news, as to be expected. We're sitting at 131.05. We're 5 ticks away, folks, from the lows that we made yesterday of 131 in the 10-year. Let's check in on the VIX Volatility Index right now. You get the VIX at 2166. Stay tuned, folks. I'll be coming back after the break. Give us a call, 877-927-6648. We'll be right back, folks. Stay tuned.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&Ps, negative by about 5 points, sitting right at 3902. NASDAQ slightly in the green by 15 points, 12,795 for the NASDAQ 100. The Dow dropping a bit off 70 points right now at 32,694. And we got the Russell flat at 2261. Crude market, we'll call it flat as well, sitting at about $60 right now. Gold contract this morning up by $1 at 1734. And let's jump to notes and bonds. You got the 10-year right now, right towards that lower level. Quite a drop, folks. You look at where we were at 8 in the morning. You were trading at 131.19. We just traded off half a point in the 10-year. You're looking at a yield now approaching 1.75%. Yet again, quite the number on that 10-year. We got the 30-year right now flat, 154.01. The 30-year, the low yesterday of 153.07. All right, checking back into some of the other stories out there. How about Tesla? Chinese military reportedly restricts the use of Tesla cars among personnel. So the Chinese military is restricting use of Tesla vehicles by some state and military personnel, citing national security. Not what you want to hear if you're a Tesla fan, folks. I mean, Elon has done an amazing job of getting Tesla into China. Tesla's China market has had an increasing role in the company's deliveries and production. I would agree with that. It's probably factored into their equity in a dramatic fashion when you think about the relationship that they've had with China and being able to build a plant over there. Tesla's China market has had an increasing role in the company's deliveries and production. The company's sales in China more than doubled last year to $6.66 billion, or 21% of the $31.5 billion total. In 2019, China's sales reached 2.98, or just 12%. So factor that in, right? 2019, they sell about $3 billion worth of cars in China. That's 12% of their total. In 2020, they sell about $6.6 billion, or 21% of the total. So in 2019, they took in $24.58 billion. In 2020, they took in $31.58. That's about an increase of $7 billion in sales from 2019 to 2020. And of the increase of $7 billion in total sales, you had China accounting for half of that increase. $3.6 billion of the increase was China alone to their total revenue increase from 2019 to 2020. This story, I'm actually surprised Tesla not reacting more so to it. The last thing you want as a Tesla shareholder, folks, is for China to be an enemy of that company. Putting Tesla on a daily, you're down 0.5% today. That's basically nothing. This thing's pulled back from $900, the high on January 25th. We make a low on March 5th of $539. Quite a haircut. We're trading at about $649. Just for curiosity to see kind of the pullback we had, you trade down to a low of about $557. We almost made it back up to the 50%. You know, depending where you put this acceleration completely, you could go all the way from the high to that flash low, and check that out, folks. It was almost an exact 50% pop. You trade from 900 down to almost 541. We trade up 50% of the move to 721, and now we might be on the run again. And if this is an A to B equals C to D, folks, you're talking about a $360 A to B leg. You'd be coming off 720. That would cut it in half yet again to a price point of $360 for Tesla if it ever did that run. You know, you have some room to the downside. We'll see how it reacts at these lows. If you were looking for an ABC down, you'd want to see Tesla accelerate past those lows to back that up yet again. 360 would bring it pretty much to the bottom end of this range of the consolidation you had back here. Now, again, keeping things in mind, folks, the run that this thing has had from $270 has been astronomical. Okay, that run from $270 first began when they announced a stock split. So you could call that an irrational run from $270 to $500. We almost gave it all back down to $330. The next run began when they got added to the S&P 500. That news getting announced in early November. The ad takes place. You can't miss it on the chart, folks. The day of volume, 2 million shares traded of a company that was trading at about $700. Quite the movement in terms of equity and markets. You trade up to about 700 when it gets added to the S&P 500. The most remarkable run is after it got added to the S&P. You saw this stock go from 700 to 900. We've now given back all of that. We're now below the price level we were at prior to getting added to the S&P 500. But if you don't think this thing can hit 360, then you're not paying attention, folks, because it was just trading at 270 You announced a stock split. You announced an add to the S&P 500. Even at 360, up from 270, you'd be up 33% from August in this equity alone, even at 360. You know, just if they start getting some problems in China and China starts saying don't trust Tesla vehicles, I don't know if you're going to see that type of a rise when they accounted for half of the revenue growth for the whole company from 2019 to 2020. Tesla, though, only down about 0.8% today on that. Let's check back in on Nike and Tesla, see how they're reacting. So Nike continuing to slide a bit on their earnings down to about 138. You got FedEx on the other side, spiked to 281.59, back to about 278. FedEx, strong numbers, up about 5.5% in the first few minutes of trading on their earnings last night. Okay, checking in on some of the other stories that we got in terms of stocks. We talked about Nike. We talked about FedEx. You got Skills. They were out with a 32 million share public offering. So Skills, mobile gaming. That's what I was looking for. So gaming, they're going to announce 32 million shares. And a lot of companies, rightfully so, we're at some pretty lofty valuations, folks. If you were a CEO of one of these companies and you're seeing the type of share prices that you have, so they're pushing out $24 a share, selling 17 million shares, and certain stockholders selling the rest. So SKLZ is their symbol. And not bad when you think about that, they were just at 32.87, so they probably started to see this thing slide and said, no, we don't want to let this go from, you were just at 46, you trade down to 24. Looks like they were able to push out 17 million shares at 24. The market, of course, did not like that, considering you closed yesterday at a price almost at 27. So you're talking about being able to push out the shares at a 10% discount. And right away, you trade to 24.54. This equity, you're pushing right to the lows we had early in March. You're talking about a low of 23.09. And you drop below that level, and watch out, folks, you might see a slide. I mean, if you see this company pushing out shares at $24 in a huge way, then be aware that they don't want to push them out any lower. And they might be able to seize that opportunity right now before they fear that the stock price could actually trade below these levels. And you better believe it, when we were just trading at a price point of $32.87, and now we're off $8 from that price at $24.46. All right, AstraZeneca, they continue to be in the headlines with their vaccine. So the vaccine received the backing of Canada health regulators, which joined the European countries, saying the vaccine is not linked to an increase in blood clots. We got a lot of people getting vaccinated, folks. And of course, anytime you have, we're approaching, I think it's like 300, 400 million people across the whole globe. We just reached 100 million people vaccinated in the U.S., clouding some of the science there, as of course you're going to be dealing with some people facing hardships for their health. Looks to be a safe vaccine, but that issue getting clouded, especially over in Europe, and see how that plays out for their economy. Scrolling down to what else we got going on. How about Ford? All right, good. We'll tease this. Ford's higher this morning. They got an upgrade to overweight from equal weight, increased its price target to $16 from $9. That's quite an upgrade from Barclays for Ford. Jump over to their shares. Ford shares up by almost 2% today on that news. We got the S&Ps negative by 10, folks. Stay tuned. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got lows continuing to accelerate. You're looking at an S&P now down 24 points on the session, trading at 38.82. And you look where we were. We're actually positive coming into the open in terms of at about 8:45, or even let's back it up to about 7 in the morning this morning in the S&Ps. You were trading at 39.20. We've given up 40 S&P points over the period of the last hour and 45 minutes, making lows as we speak. You got the NASDAQ stocks in the negative, 12,727. The Dow off 267 right now, trading at 32,507. I mean, look at this drop we just got from the Dow. Intraday yesterday, you're off more than 600 points from where we were. I mean, banks getting hammered today with the Fed news. You got Bank of America down about 3% right now. JP Morgan down more than 3%. JP Morgan just traded off $8 from where we were yesterday. Watch out, folks. Citi down about 2.5%. Wells Fargo down about 3% as well. Big news in a big way. Probably some of that anticipation adding to the angst in the note and bond market with that news on the horizon, as in whether the Fed was going to extend the ability of that leverage for the banks. They decided to not extend that. It's going to allow banks to have to make sure that their balance sheets are capitalized, right? They have to have the capital to back up what they're holding of treasuries on their balance sheet. Not what you want to see if you're a bank holder, not what you want to see in terms of just if you're a little worried about where we are in notes and bonds, because this could send yields continually higher as you get the 10-year right above the lows we had yesterday. We're sitting with a yield of about 1.75%. I mean, some of the moves, folks, they're quick right out of the gate. We'll jump to commodities. Gold holding pretty steady right now, considering everything else we have going on. Gold's flat at $17.33. The oil market, taking that Fibonacci over there for some clarity. Oil, we'll back that one off as well. Oil just traded from $60 to $59.31. We're within about $1 of the flash low we had yesterday, coming into 330 at 58.28. And let's pull up the VIX this morning as we get the volatility index. As you may expect, the market selling off, the VIX almost reaching 23 after having an 18 handle just on Wednesday. I was talking about a couple times yesterday, folks. You put this thing on a daily, right? Well, that's a 4-hour. Let's throw it on the daily. And we have lows of 18.95. Folks, you don't have to back it up many times to see that spikes still exist in this market, whether we get one here or not. One of the things I've been commenting on is it's not going to be all roses, folks. There are going to be some grand expectations in this market over the next 3 to 6 months as we look to come out of COVID. We're getting over the hump with vaccines, but now is the time for the expectations the market has built in at a time when you have the S&P sitting at almost 3,900 to to rebuild that economy in fast fashion, right? We got economic forecasts that are now 7-8% for the fiscal year. There's going to be some grand expectations on the days that we actually get those GDP prints, on the days that we get some non-farm payrolls. I mean, what happens when we're looking at non-farm payrolls for the months of May and June? Maybe we're coming into the summer, right? But we're coming into the summer where we need service jobs to explode back to where they were of some semblance of before COVID. Whether you're talking about restaurants, whether you're talking about travel, whether you're talking about hospitality, hotels, etc., those jobs should come roaring back. If they don't, the market may be a little timid about some of those expectations when we need to make up 10 million jobs. Now, here's the next element. If we start making up those jobs quicker than we anticipated, what is Chairman Powell going to say at his next meeting if we start inching back towards some sense of normalcy, which we should? That's the expectation, folks. Domestically, we look to get over COVID in the next few months. Well, if we get over COVID in the next few months, you better see those jobs start coming back. It's going to take some time, but the market's going to be looking for an advancement, and then the market's going to be looking at how Chairman Powell is going to balance getting those jobs back and how we start to see basically some of their accommodations to the tune of zero interest rates, to the tune of $120 billion a month of buying, whether they start to wane some of those quicker than the market may have projected early on in COVID. S&P's right now down about 21 points. Let's jump back to what we have going on. Other stories out there in the market. What do we got? All right. So Molson Coors, they got a downgrade, right? Pre-market action added it to its short-term call catalyst. No, so a good one. What? Short-term, they fell 2.3%. But Deutsche added them to the short-term sell catalyst. There you go. So Deutsche Bank said the call, I thought it was a downgrade, is based on short-term concerns, including a material impact on the first quarter results from adverse February weather in Texas. I mean, you think Molson, right? You think beer. It's going to be a party when the world opens back up, folks. I imagine they're going to be selling some solid Molson. But as you saw with Nike, there's a lot of problems that are persisting across the globe in terms of just processes that companies have to go through while the world fights a pandemic. You got Molson down about 3.5%. You put this thing on a daily. Been a strong stock off the lows of $32. We start to get the news that the economy is going to open back up in November. We get vaccine news. You go from 33 to 56. We've paired some of those gains just on a Fibonacci level. Always like to see what kind of moves we're working with. You pull back to about the 50%, folks. And look at how that lines up so well. Right? You come into their earnings, you give up a 50%, you bounce right off the lows that we had in the middle of the December. We've kind of scuttled across those lows, 44.34. We're now sitting at a 3.8. That could just be a pullback of a short-term pullback in a longer-term trend. I imagine they're going to be okay. They were dealing with some woes in February for the weather. And even a company like Nike, they're going to be able to handle the problems they're having. But this morning, they're paying the price down by about 4% on their earnings. Nike at 137.43. And FedEx jumped higher on their numbers, continuing higher, 281.40 right now for FedEx shares, up 6.6% on their numbers. We got to talk about Bitcoin. So Bitcoin up another $910. Talk about just strength across the board, folks. You put Bitcoin on a daily, and we are just hanging right at these levels. Now, what's interesting here is early on, I put this A to B equals C to D on Bitcoin back in about a month ago. And you did see quite a pullback. We had an A point. You could call it about 17,500. You had a B point up there at about a high of 42,700. That's about a $25,000 leg from A to B. You pull back. And what's interesting here is your pullback, again, Fibonacci levels, will go from that A point to the B point, 50%. I like those 50%. I like the 382s. I like the 618s. But 50% is all over the place in this market right now. You pull back 50%, and then boom, you start a next leg. C leg starts at about 30,000. That would put the D leg up at about 55,000. We've been hovering kind of right near that area, 58,260. You did get quite a pullback back to 45,000. But all things considered, you got some strength in a big way as Bitcoin, you could call it just consolidating between about 55,000 and 60,000, quite a price level to be consolidating at. All right, folks, the fun is not stopping just yet. We got markets pulling back. You got the S&Ps making lows right now as we speak. You're trading at 38.79. We're off a solid 100 points from where we were just late yesterday, basically in the overnight session Wednesday night at 10 o'clock. We're trading down 100 S&P points from that level, 38.81. We're only 20 minutes into trading, folks, on Friday action. Stay tuned. We'll be coming back after the break to finish up the show. We'll see what else we have going on for Friday trading. We'll take a look at that note market yet again, folks. Stay tuned. We'll be coming right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got a little bit of a bounce going on right now. S&P is trading at 38.90. We're up about 13 points off that low we had just in the last few minutes. Jumping back to the story of the morning. So you have the Federal Reserve saying it's not going to extend pandemic-era rule that allowed banks to relax capital levels. So that rule, the supplementary leverage ratio for banks, the Fed decided to not extend a rule expiring at the end of the month that relaxed the supplementary leverage ratio. The rule allowed banks to hold less capital against treasuries and other holdings, implemented to calm the bond market during the crisis. And the decision, as they state here, this is how it goes, right? Traders have warned in response, banks could sell some of their treasury holdings, right? If you have treasury holdings on your balance sheet, as of yesterday, you thought I might not even have to have capital to back that up. Well, now it comes, no, you need capital on your balance sheet to offset treasury holdings and other holdings. Well, one thing banks could do is just sell some of those treasury holdings. You sell the treasury holdings, you don't have to have the capital required to have the ratio required to hold those treasuries. You sell treasuries, we know how that market's been going, folks. The last thing the market wants to hear is that you're going to have more selling going on in the treasury market. We got the treasury sitting at 131.03, the 10-year note. We're sitting at a yield of about 1.75%. You put this thing on a daily, it's a rocket ship to lower prices, folks. You put it on a 3-year weekly, and we're now below. I mean, the thing I was talking about originally was we're back to the middle of 2019 highs. We're inching into the lower of these levels now, sitting at 131. I mean, the lower boundary line of where we chopped around is about 128.09. You're looking at a solid 3 points that we could see lower in that 10-year with a yield right now sitting at 1.75. S&P's negative by 16. Tech stocks back in the positive, actually, putting it back on a daily. You get the NASDAQ 100 positive right now. Well, we'll call it flat. The Dow, though, taking quite a hit. The Dow off about 300 points. As I mentioned, some of the bank stocks in particular getting hit, with JP Morgan down more than 3% right now. Citi down 2.2%. JP Morgan down about 3.1%. All right, folks, thanks for tuning in. Stay tuned. We got our man Basil Chapman coming up live with the Tiger Technicians Hour from 10 till 11. Fast Market at 11. We got Larry Pesavento, noon to 1 Eastern time with his program Trade What You See. Steve Rhodes, Dave White, Tom O'Brien, my dad, all this afternoon. Thanks so much, folks. Stay tuned.
Building wealth